G'day there, welcome to the week ahead on the 21st of Feb. This could be a pretty interesting week, so well worth having a look at where equities are. The S&P 500, it's in a pretty tricky spot that if we do see selling sort of accelerate early in the week, things could get pretty hairy. Also gold breaking out above the key levels I've been showing you for quite a while now, so we'll have a quick look at gold as well, and that should do us. So starting off with the S&P 500, the first thing I want to note is this 200-day moving average, which you can see going through here. It's one that the market looks at very closely, and I'm just wanting to compare where we're at right now versus what's happened in the past, just to give you a sense of where we're at. You can see in the past when we broke through that 200-day moving average, you have the first, sell-off, setting off lots of stop losses. Then prices tried to recover, breaking back up, looking bullish, heading back above that 200-day, and then turning down again. And that next leg, once it broke below the previous low, wow, look what happened below there. So a similar situation, what we're looking at now, where we had the initial break of the 200-day, lots of stoppies going off. The buying support came back in, looks bullish, which sucks out all of those shorts, so that just makes it difficult for people. And here we are turning back down, breaking below, and starting the week with the S&P 500 opening quite weak. So it is a pretty explosive situation going down through that 4,200 level in the S&P futures. That's a bit of an unknown under there. What is going to happen beneath that low? How big will the selling pressure be? So it just increases the risks around at the moment, especially with the Fed possibly doing a 50 basis point increase in rates in March. And I'm really leaning towards that as a possibility, because they really need to get moving and turn things around quickly to chase down inflation. So that will be a big signal to the market to do that. So I think things looking quite vulnerable, and the technical setup certainly looking quite vulnerable as we start the week this week. Just something else that I do want to note is that last week we saw a weekly sell pivot confirmed again. So prices having that initial wave lower, we got the buying pressure come in. That actually did create a weekly buy pivot. So there's a chance we could have seen a bit of sideways motion for a while. And just interesting that so quickly we've seen that weekly sell pivot. So the selling pressure is there. And basically I'd expect to see pretty good selling pressure if we rally again from here. It should really meet the selling pressure again and head to the downside. So I'm thinking up around that 4,400 to 4,450 odd. Should see lots of resistance this week, and look, there is a chance that it does just continue to the downside. The one sort of possibly bullish thing is to keep an eye on how prices trade right now, actually, starting this week, because prices are in the buy zone of that little wave down from the all-time high in the S&P. So this is that spot where everyone gets bearish. This is certainly not a spot where you're putting shorts on. It's a high risk spot to be actually putting shorts on. Where I'd be looking to put shorts on, is up around that 20-week moving average when things are turning back down from there. This is a point where you need to either have a position on or be waiting, because there is just the chance that the buying pressure could come in prior to breaking below that low at 4,200. And we could see a mean reversion move, which could just see us range trading for a bit longer. So the key levels to watch is that low around 4,200. That's where we need to say, boy, this thing could really get hammered. So you've got to be wary. But right where the prices are right now is just that point where, you could see some buying pressure come in. I don't think it will. I think things are set up pretty bearishly right now, so how this trades at the start of the week is going to be very interesting. But yeah, I get really bearish once it does break below 4,200. And if we just have a quick look at the monthly chart, just to give you a sense of what's going on there, that red line being the 10-month exponential moving average, and that's always support on the way up in a strong trend. It'll constantly hold above there or bounce off there, as you've seen. Last month it went through and bounced, and just right now we are testing that, breaking through the 10-month exponential. So that's where that low around 4,200 is important, and really, yeah, breaking through there, you're heading to the 20-month simple. That's down at 4,000. Could be good buying support down there, who knows, but it's just an area where the momentum can really turn down for a while. So you've just, again, the way it's looking is that there's bigger picture selling could be afoot pretty soon. And moving on to gold, we're finally seeing a bit of a breakout, and I think it could really accelerate from here to the upside. I've shown you this in the past. We've got the big rally over 2018 sort of to 2020, which took it to the all-time high, and then we got the correction which happened over the last couple of years, and prices really just stuck in that range after the initial correction down to around 1680 in gold. So all my calculations based on that. We've got the buy zone of that area and then the sell zone up here, and the point of control of that range coming in around 1880. That's the area I've been interested in, and you can see the last time we rallied out of the buy zone, the last couple of times, it really hasn't been able to bust out above that 1880 level. It actually hit there perfectly last time, sold off again down into the buy zone, but the buying pressure is there, and it's continued to consolidate, and now it's just turning up, busting through that 1880 level. So there is a chance that this just accelerates up towards that sell zone around 1975 to 2025 in gold, in US dollars. And just a more detailed analysis, if we're just looking at the way that this sell-off has evolved, you'll see that downtrend quite clearly from the high, all-time high, down to the bottom of the correction. So what I'm focused in on is just the most recent wave to the downside of that corrective phase, and I can then look at that range up close. So I'm just looking at that most recent wave to the downside that you've seen there, and you can see that that buys and sell zones all really being respected within that wave. So that's really the key thing that's been going on in the short term, is being stuck within that wave, and just noting that where prices are right now are up in that sell zone, up around 1900. So really big picture, we need to see prices crack through that sell zone area and bust up through that high, which is the lowest high within that downtrend from the all-time high. So once we break up through there, up through 1960, things are looking really good for gold, for it to continue to the upside. But right now, there is just a little risk that we could see more selling pressure up around this sell zone area of that wave before turning up and really taking off. But all up, the fact that we've broken out above that 1880 region is good for me. It's bullish. I think there's a bunch of gold stocks out there, very beaten up, looking like pretty good value, and technically starting to look interesting, like they want to run. I think that's the area where I can see some value in the market. All right, well, that's enough for today. I shall come back with more next week, and just be wary if that S&P heads down through 4,200 early in the week. Things could get pretty explosive. All right, cheers.